This Monday, the hot topic in the news is that Elon Musk put $1.5 billion of Tesla's money into Bitcoin. This pushed the price of Bitcoin to record highs after it had already hit new highs of $40,000 back in January. People like Cathie Wood have been predicting this for a while. It doesn't come as a total surprise, and even Andre Geek had predicted this exact thing happening about a month back on Logan Paul's podcast.
I think this year, probably this year, I could see someone like Elon Musk or Tesla being like, hey guys, by the way, I put like 5% of Tesla's cash reserves into Bitcoin.
Of course, we're not unfamiliar with Elon Musk's tweet storms driving up the prices of anything he mentions or puts in his Twitter bio, but actually putting $1.5 billion into Bitcoin is a huge move for Tesla and really a huge move for Bitcoin in general. So today I wanted to break down some of the interviews that Cathie Wood has done, as well as some of the reports that she has released, and we'll break down in simple terms what she's talking about, why she believes that Bitcoin could eventually hit $500,000, and how Elon Musk and Tesla kind of play into this whole scenario. I am neither encouraging or discouraging investing in Bitcoin or following people like Cathie Wood, but the point that I want to make with this video is that if this is a topic that is interesting to you, it's important to start to look at some of the information that comes out about this, and then from that information you can decide for yourself if these are people that you agree with or not, and whether or not you think that these are things that you want to be investing in. I will leave links to the videos and articles that I'm referencing in the description. So let's start off with a pretty simple concept where Cathie Wood explains why she thinks that this run-up with Bitcoin is a little bit different than the last big spike that we saw in Bitcoin's price.
What's been interesting this time around is if you look at Google search trends for Bitcoin or Bitcoin's price against the Bitcoin price itself, you'll find that there's not a lot of speculative activity by that measure. In fact, in 2017, they were 1 for 1 together, but it has been pretty quiescent until maybe very recently, but throughout last year. And so that gave us a lot of comfort.
Okay, so what she's talking about here is the level of public interest and the search volume of Bitcoin now versus what it was in 2017. So if you go to trends.google.com, you can look up the search volume for any word or phrase, and on a scale of 1 to 100, it will show you how frequently that word or phrase was actually searched for. These trend graphs are important because it starts to show you where public interest is, and it can start to show you where we see pandemonium around news events or things like that. If you search for Robinhood, for example, you're going to see a massive spike in search volume for January. That means that a lot of people were searching for it, and if you search for something mundane like lettuce, probably the only spikes you're going to see are whenever there was an E. coli outbreak or lettuce somehow made it into the news. So many times it coincides with mainstream media coverage or mass interest in general. So if you put Bitcoin into Google Trends, you get this graph, and this looks very, very similar to the actual price of Bitcoin during that same time. Cathie Wood said that it was moving at almost a 1-to-1 ratio of the search volume and the price. And if you pull up the actual graph of Bitcoin during that time, she's right. The search graph and the price graph are almost exactly the same. But what she's saying is that that's not what we're seeing this time around. So if you overlay these graphs or put them next to each other, the price is at an all-time high, but the search volume isn't. So what this could potentially mean is that it's institutions that have been driving up the price instead of retail investors. So if there are a few institutions that are dumping large amounts of money into Bitcoin, that's going to drive up that price, but you aren't going to see that same spike in the search volume as if it was the retail investors or general public that was driving up the price. But why does she think that the price of Bitcoin could eventually hit $500,000? So if you've watched any of Cathie's interviews or read any of the reports that Yassine has written on Bitcoin, a common thing that they like to bring up is what would happen if large companies and institutions started putting just 1% of their cash into Bitcoin, and what would happen if they raise that up to like 5%.
We think one of the reasons that Bitcoin is appreciating is institutions are dipping their toes in. Now, they're doing this not just from an investment point of view, but from a corporate cash point of view. Some of you may know that MicroStrategy has converted all of its cash, the cash on its balance sheet, into Bitcoin. Square has done that with, I believe it's 5% of its 1% of its assets, 2% of its cash. And I believe we're going to see other companies doing that as well. We know that PayPal also announced, so it is following Square and Robinhood and allowing the purchase and sale of Bitcoin. PayPal is, a much more conservative, more old world company than either Square or Robinhood. So again, some validation there, seal of approval of sorts. And the paper that Yassine wrote describes what would happen if institutions decide that a 5% allocation to Bitcoin is appropriate. But the reason 5% is important to me is I saw real estate entering pension funds in the 70s, and they started with 1%, migrated to 5%. We saw emerging markets, many pension funds and institutional investors moving into emerging markets as MSCI developed that classification and moved from 1% to 5% and wherever they are now. And we think the same thing is going to happen with Bitcoin and other cryptocurrencies. If that were to happen and all institutions were going to do it, of course, that's not going to happen, but some might add more, so offsetting those who don't participate at all. That would add somewhere between 400,000 and 500,000 to the Bitcoin price. We're at 20,000 right now. Now, that is not going to happen tomorrow. It's not going to happen for years. But if we're on our way, it is going to be a very pleasant journey.
And it's really that concept of these institutions and large companies like Tesla starting to allocate some of their money towards Bitcoin that she believes would be the driving factor that causes Bitcoin to eventually reach $500,000. So she talks about MicroStrategy, which is a company that has put some of their money into Bitcoin already. We saw Tesla do the same this week, and there's already speculation about whether we will see Apple or any of the other FANG companies follow in Tesla's lead. She also mentions companies that you've probably heard of like Square and PayPal that are also trying to dip their toes into the crypto space, but she also brings up a good point by bringing up MassMutual, which is an old, super conservative life insurance company, and they have recently started getting into Bitcoin as well.
The most surprising one to me thus far has been MassMutual. It put $100 million into its general account. Now, its general account is enormous. So $100 million is something like 0.001. But what that move told us is, MassMutual is very conservative and very highly regulated. And so it had to jump through many more regulatory hurdles than I thought would have been possible by now. So I think that is a seal of approval.
Now, the point that she's making here with bringing up MassMutual is that because they are such an old and considered such a conservative company, for them to be able to jump through all of the legal paperwork and loopholes, if they were able to successfully do that, likely other companies and institutions will be able to do the same. So why does she believe that companies like Tesla investing in Bitcoin would affect the price so much?
We actually think about this. Is Bitcoin ready for institutions? Bitcoin is it's roughly a $600 billion market cap. So not even half the size of Apple or Amazon, right?
Yep.
Doesn't put it into perspective. And yet it is a very big idea. I think a much bigger idea than Apple or Amazon. It's the first global truly global digital currency out there.
If you don't know what market cap is, that's very simply the total value of all the shares of a company, right? So what she's saying is that currently the total value of Bitcoin is less than a company like Apple or Amazon, but she believes that it's a much bigger idea. And again, this goes back to her concept of if every company in the S&P 500 just put 1% into Bitcoin, how that would drive the price up. So that brings up the question of why these companies would want to invest any of their money into Bitcoin at all.
If you look at the correlation of Bitcoin's performance relative to any other asset class, it has the lowest correlation, meaning if you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk. Right? So that's why institutions look for that low correlation. Bitcoin has it.
So in this interview clip and in this report written by Yassine, they say that there is the lowest correlation between Bitcoin and any other asset class. So what does that actually mean? So on pages 9 and 10 of this report, we can see how they compare the movement of Bitcoin to the movement of these other assets. And that is all they mean by the correlation, right? Is how these move relative to each other. So does the price of gold affect Bitcoin, etc. So in all of these graphs, you can see that it hovers around 0, but is kind of in that 0.2 to negative 0.2 range. Basically what this comes down to is that because Bitcoin is not super closely correlated to any of those asset classes, it makes it a good option for companies and institutions to potentially invest in to diversify a little bit more. It's really just a hedge against any other assets that they have or even the cash that they have, because if one thing goes up or down, or even if the US dollar goes up and down, that doesn't necessarily relate to Bitcoin. And so that can be a way for them to hedge against the movement of any of their other assets. So how does Elon Musk investing some of Tesla's money into Bitcoin affect other things? Well, we'll probably see other companies follow Tesla's lead. Like I mentioned earlier, there's already talk about whether or not Apple will join in. And on top of that, I think that we can probably expect to see a little bit more talk of Bitcoin and cryptocurrencies being integrated into kind of the traditional financial space. So Fidelity has been pretty vocal about them wanting to include buying Bitcoin on their platform. We already saw Robinhood include that on their app, and we have seen a few other companies start their own funds. So I think that Tesla investing in Bitcoin will kind of kick off that initial interest of how other companies and institutions and financial companies can start to include that into their own businesses. If you like this video, be sure to subscribe, and remember that now through February 28th, when you sign up for M1 Finance and deposit $1,000, you will get $30 back. So the link to that will be in the description, and I will see you guys next time.